Keep in mind the headline number includes food and energy, and more specifically, it includes energy. So oil prices had a big impact on all this. Good afternoon. The main story here this week is we have inflation numbers coming in really high, but we'll take a look a little bit beneath the surface at what is truly driving this for a little bit better read on some of those inflation prints here this week. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered each week and hopefully bring to you some of the market news and data trends that we're watching that are truly shaping the markets week to week. And this week, the main focus is around inflation, although we'll talk a little bit about how this translates to what's really beneath the surface as well. So we'll spend a good amount of time. And then we also have banks kicking off earnings season this week. So we'll kind of touch briefly on what we're seeing in a general trend there as well. So basically, this week, the main focus is around inflation. We had CPI and core CPI numbers come out this week. CPI, so the headline number was up 0.9%. Yes, 0.9%. You heard that correct. This was high and higher even than expectations were going into this reading. Expectations were typically around 0.6%, something around along those lines. And then core CPI was up only 0.2% versus expectations that actually core CPI would be up around 0.3. So basically, headline number, very high, even higher than expectations. Core number, relatively in line with what we've seen and actually a little bit below expectations. So we're going to break that apart a little bit more here in a minute, but keep in mind, because we're going to cover PPI as well, the headline number includes food and energy. So you might already know where I'm going with this, but keep that in mind. Headline includes food and energy. Core takes that out of the equation. All right, before we talk a little bit more about that, we also got PPI data that came out, so producer price index, and the headline number there came out at 0.5% versus expectations that were actually really high. The expectations going into this were in some cases over 1% even. And then core PPI came out at 0.1% versus expectations somewhere around 0.4. So again, same general story, higher headline number, lower core. Headline, depending on which one you looked at, either higher or lower than expectations, but core in both cases lower than expectations on both the CPI and the PPI number. All right, however, let's break this apart a little bit because keep in mind the headline number includes food and energy, and more specifically, it includes energy. So oil prices had a big impact on all this, and that's what I really want to focus on to kind of read beneath the surface here a little bit, because if you took that number at face value, it would be a bit concerning. Obviously, the question might go to the Fed and what they might do, but when you break it apart a little bit, that number is not quite the same. So energy and energy commodities is one of the categories in the CPI number. That was up 21.3% alone. So that is the biggest driver by far on everything that we see. Biggest impact, by a long shot in terms of the headline number. But if you look at the core number, that tells a little bit more of a true story, right? The core number suggests that basically we're roughly where we have been, and again, maybe even a little bit below expectations, and basically would suggest that otherwise inflationary concerns were a little bit muted actually as a result of some of these readings, and maybe even a little bit below expectations. So the way the market, I think, is reading this is they're saying, okay, although the headline number was high, we knew that was coming. And basically, I think they're looking more at stripping out those energy costs and even food, for instance, maybe even including that. But if you look at everything X energy, the inflation numbers really are not that much to write home about. And so I think the market going into this was, I don't want to say pricing in a rate hike, but there was conversations about it in the Fed meeting minutes. For those who tuned in last week, you probably caught that. And so I think this, at least for the time being, takes the rate hike conversation out of the equation anyway, because inflation really didn't run the tables essentially. Now that said, just to be clear, this does matter because that energy price, if it stays elevated, matters a lot for us as consumers. And if we're paying 21% more for our gas at the pump than we were just a month ago, some of us we may need to figure out like what ultimately where that comes from, and maybe we spend less in certain areas than others. And so that's why these things matter so much in terms of the economy as a whole. So we'll continue to keep an eye on it. But again, keep in mind, this was expected in terms of energy costs, and really that is the main driver of that headline number. Separately, we also had bank earnings kick off earnings season here this week. And generally, we're seeing pretty strong results. What I will share is that a lot of this was priced in. So performance is a bit of a mixed bag. We've got some banks that are doing well, some banks that are doing okay, some banks that aren't doing great. But the results in general have been strong to kick off the earnings season so far. And the reason the markets look to banks a lot and how this might translate is because it looks at the consumer. It's a good glance at the consumer and how strong they are. So this doesn't mean we're going to have a strong earnings season just in these alone, but that's why banks are weighted so heavily here as analysts look at earnings season. And again, good start so far. We'll continue to keep you posted as earnings season unravels here a little bit, but a good start. And as a result of all of this, the S&P is now at record highs again. So been a very, very strong start to April. Hopefully that continues, but certainly seen markets pick up pretty significantly off of the back of, I think, some of this lower inflation data without the headline, and then the earnings season kicking off, as well as hopefully tensions in Iran settling to a degree, although that's still, of course, a big question mark out there. So be sure to tune in next week. We'll cover retail sales and leading economic indicators. We are going to skip the question of the week this week because we have a client event this evening. But thank you for tuning in. Be sure to check us out next Thursday. We'll be here at 3 o'clock to touch on, again, retail sales and some of those U.S. leading indicators. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.